All right, friends, we're hopping straight into Q&A today. I do have a little bit of an update for you. I'm putting together a best markets of 2021 report, I hired a computer science or developer to scrape some market data across the country. And so I'm putting together best markets 2021. For most of you, that won't be super critical as you've already picked your markets. But I did go through and validate from a data perspective that we're on the right track. To be clear, when I filtered through the data and then filtered it down from a rent to price ratio effect, I want to say that 5, maybe 6 of the top 10 markets are markets that people here are actively investing in and have selected. And the only reasons the other ones or others might not be is because of the filtered constraints that I put on it. So for example, if I constrained the data to say only positive population growth and your market was negative 0.001 population decrease, then it would be filtered out. So, but I did go through and check through all the markets to see how they're performing and how they're working. I think we're still on the right track and everybody's in a good position. So I will be coming out with that report sometime probably in the next week. And so you'll see it. You might thumb through it. It may or may not be helpful to you guys since you've already picked your markets. But nonetheless, I thought it'd be interesting information for you guys to know and be able to see. So with that, we'll go ahead and hop into Q&A. As always, when you've got questions, hop down to participants and select raise hand, and we can get going. I know we've got a couple goal updates as far as some successes that have been had. Coleman and I talked about his, and I know Jared, you've got a question. You just raised your hand on Coleman. I'll come over to you at some point to talk a little bit about your the success on your first property. So Jared, I'm hopping over to you first.
That's great. I've just been interviewing with property managers and general contractors like all day today. So I've got like 7 kind of small questions. So if you want to like hop over to Coleman and start with him and then come back to me for time's sake.
No, let's do it, man. Let's rapid fire.
Cool. Okay. So it was like really great getting to interview folks just kind of back to back and see just the differences. With property managers, like I talked to some who are managing, like 15 or 30 themselves, and then some that are part of like big conglomerates and managing like 300 plus ones kind of in a team realm. What are your thoughts on starting out as an investor? Should I probably be looking for a property manager who's going to be able to give me more focused one-on-one attention?
That's a good question. I can see arguments for both sides. I was talking to a good friend of mine who we started investing at the same time, and he invests in Abilene as well, and he uses a larger organization, and so I can see the benefits and drawbacks of each. One of the things that I think is really helpful for you from a property management perspective is their willingness to help be your eyes on the ground. So I could see a larger organization not be able to do that as much. So if you're managing a bunch of properties, you're a part of a larger organization, you've got more rules essentially. And so what you might ask is, if I've got properties that I'm interested in, and these are, after I've already ran the numbers and it looks favorable and I need some eyes on the property, would you be willing to walk a property for me? And I'm talking like once every maybe couple weeks, but probably longer than that. And just get some insight from them, how willing they would be to share their time to go walk a property and potentially send you pictures or FaceTime you through the property. But larger or smaller, I wouldn't be as concerned with. I'd be more concerned with their terms. So, for example, are they going to allow you to scale? Once you have 4 properties, are you going to be able to get some economies of scale and get an 8% per door property management fee, instead of them holding it flat? Every now and again, you'll have a property manager will say, well, we stay at 10% or 11% or whatnot because our quality is really, really good. And that's, that's fine, but you're really looking for economies of scale, because the reality is a lot of property managers, or a lot of property management can be done by a lot of different people. And so if there's a property manager that will give you 8% at the same quality as the other one, that's fine. So does that help answer your question?
Yeah, it does. One of the property managers I talked to, they mentioned that their tenants don't need to sign a lease until 2 weeks after being in a property. Is that like a yellow flag? Is that?
I mean, it's kind of odd. I don't know why they would do that. You might just seek to understand a little bit why. It may be because they're essentially saying, we're giving you like a return period. If you want to exit because the house isn't actually what you signed up for or whatnot, that may be their perspective. But for me as an investor, that would not be attractive.
Okay, great. Talking about raising rent with each renewal, I've had some who said, yeah, like every renewal we raise it, 2%, but then some who go with like a dynamic, like, hey, just whatever the market is based on. If the market calls for a raise, we do it. If not, we don't. And that could be, any kind of percentage.
Yeah.
What are your thoughts on?
I would ask them on how they determine whether or not they do an increase. My proclivity, I lean towards saying I want it increased every year, because it at least it forces them to make a decision. So if market has decreased, then they're going to say, maybe we shouldn't. And they'll touch base with me and say, hey, I think we shouldn't, because it's going to be harder to get it released. And so in that case, I'm happy to just leave it the same. But the default not raising rents, I'm like, I would rather just default to raising rents. The other thing is, if you're, for example, if you've got a rent that is, say, $800 and you're the tenant, pretending you're the tenant, and they increase it to $820 a month, that's not a very big deal. But then if you wait 3 years and then they increase it to $900 a month, you're like, oh man, I'm getting screwed or whatnot. You just feel that way. So I would rather smaller increments over time. One, because it tends to keep more tenants, and two, because it creates an expectation that rent is going to go up.
Mm-hmm. Yeah, that makes sense. Jumping over to like general contractors, what's a good turnaround time for a bid from a general contractor? One guy mentioned like, hey, give me like 48 hours to, run some things by some other guys that I may need to and everything. Is 48 hours pretty standard? Is that good? Or am I looking for quicker than that?
48 hours seems pretty reasonable. I think ideally it would be closer to like 24. But in a situation like that, it also depends on how quickly you want to move on the property. If you need to make a decision like today, then what you need to do is tell the contractor, hey, I need a pretty good estimate. Like, I don't need a quote, but I need you to, like, if this is going to be $25,000, and you can say, I'm pretty sure I can get this done for between $23,000 and $25,000, then you can run your numbers with, say, 27, just as a little bit of a buffer, almost like 10% over, just for things that you might not remember or things that you might not have been on the same page on. That allows you to make a decision and move forward so that you don't miss out on the property. But I think 48 hours is a little long, but not concerning to me. If they had really good product and really competitive prices, and they're willing to give you near real-time feedback, I think 48 hours is reasonable.
Okay, great. One general contractor I talked to today, like, wasn't licensed, and then tried to sell me on the fact that, like, hey, it's like better if I'm not licensed because then you don't have to pay me as much. And I ended the interview there and told him, like, hey, I'm looking for someone who's licensed, but is that what I'm looking for? I'm willing to pay extra money for someone who's licensed.
Yeah, I would, because at some point they're going to end up pulling permits and having to do inspections. And if they do it like their way, maybe it's even more effective or more efficient, but you can't end up getting a permit for it. Then you may end up having to pay more money. You might even have to pay to have it redone. And it's just kind of it's a knowledge barrier as well. I think maybe if you got into a spot where you really knew the quality of the person, I might be comfortable to do that, but I would just say stick with someone who's licensed.
Okay, that's great. I just want to make sure I don't need to go back and call that guy up and say, like, hey, if I ever need a deal or a discount, like, I may be calling you back. But
well, and the thing is, you know, the difference in $500 on a rehab like this, not that big a deal, right? Because of the margin that you have in the property, it's not going to be that big a deal. So a discount of, you know, $500 because he's not licensed or something like that isn't super valuable. You'd rather know that you're going to be protected and that they know what they're doing. And that's really the only way that you can validate that they do know what they're doing, is that they're licensed, because they've gone through someone else's program to be approved as knowing what they're doing. And there's only so much that you can do to be able to understand that. They can send you great pictures. It might look great, but then behind the wall, all the plumbing is, you know, duct taped and, you know, holy and everything. You just don't know. So I use the license part to basically be my qualifier for their competence.
Okay, that makes total sense.
Yeah.
And then last question is the one that I sent you a little bit earlier today, but there's one question on the general contractor interview that seemed to kind of throw guys off. They didn't know exactly what I was asking, and I don't think I knew exactly what I was asking either. It's the question was like, what do you charge, or how much do you charge? And so, you know, they were like, I get like, it all depends on so many different variables and everything. Is there like a way that I can rephrase that question to give more clarity on what I'm looking for? And also like, what exactly am I looking for asking that question?
Yeah. Yeah. What you're looking for, the question is intentionally vague, and I may be able to do a better job of communicating that on the sheet, but it's intentionally vague to try and understand how they actually bid out products or their actual solution. So are they bidding it based on how much they think it'll cost, or are they bidding it based off of materials plus labor plus margin? Or some contractors will charge a margin on top of your materials. So not just are they charging labor plus materials, they're charging labor plus the cost of materials plus a little overage on top of materials. That's not ideal. Some people will bake it into their whole system, but one efficiency that you could, if you really wanted to manage the process more, it would require more time, but you could provide them with the materials. So it would be essentially owner materials being owner provided, but contractor installed. So OPCI. And so you could provide them the materials. If, say, you got a Home Depot card that you ended up getting 10% off or something like that, you buy all the materials, and then you can even give them access to your account. And when they go and purchase something, they give you a heads up so that you can be near your phone. Home Depot will call you and say, hey, is it okay for, Contractor McGee over here to buy this stuff on your card? Then that's fine. I choose not to do that because I don't want to put the level of intellectual effort toward it, but you could do that if you needed to.
Okay. Yeah, that's great. That makes sense.
Yeah. Cool.
That's all I got.
Awesome, man. You're doing a lot of work. How are you feeling?
Tired. I hate phone conversations. So I've been cooped up on the phone all day long, but it's been really good. Really helpful.
You feel like you've learned a lot?
Yeah, a lot. It's one thing like watching videos, talking about it. It's another thing doing it. So a lot of good experience, and hopefully whittling down. I think I've probably got the property manager that I know I want to go with, but I'm going to follow up on a couple other ones that I want to make sure to interview first.
Neat. Yeah. Well, and when you end up making the decision, follow up with the people you didn't choose, unless it was clear when you ended the call, like that contractor you mentioned, like, that's not the good fit for me. But let them know, say, hey, I'm going with property manager, Jane, because of this, this, and this. What I would have liked to see for you is this, but I would like to keep you as a backup option in case this doesn't work out. So I think that we could work really, really well together. I'm going to go with Jane first, and I'll let you know if something doesn't work out. I'll keep you in my back pocket.
Okay. Yeah, it's good to know. I think a couple of general contractors I talked to, there was one guy who just, blew me away. He was awesome. He communicated real well, and I think he'll be able to do great. And another guy I really like, but he's just kind of like, I intentionally keep things small. I'll do like one big project every 3 months, which is like what I'm looking to do. He was super knowledgeable, even like knew the Burr method, kind of everything. So I was thinking, hey, I'll keep him in the back pocket if I need someone to do it, and he can. like it'd be
Yeah.
great.
Yeah. And for contractors, you can, if you keep someone in the back pocket, it helps you in two ways. One is if your contractor just ends up not really being what you need, and you need to either scale faster, or their quality goes down, or their communication ability decreases, you can transition to somebody else. And you don't even have to have a breakup conversation with the contractor, because they're a contractor. You didn't hire them. You don't have to fire them. You just transition over to somebody else. A or a property manager is a little bit different because of the nature of their business. But the other thing that contractor really helps with, or having a backup one, is if your contractor is overwhelmed with the amount of business coming to them and they wouldn't be able to get to yours very quickly, you could bring in somebody else to finish up this deal or to get this deal rolling, and still maintain really good relationships with both.
Yeah, that makes sense.
Cool. Great. Awesome, man. Well, you're making a lot of progress. I'm excited for you.
Yeah, thanks.
You have any, what's your deal flow like? Are you getting any deals from wholesalers?
Starting to, yeah. I've networked with probably about 10 or 12 wholesalers, starting to get some deals kind of coming through that way. But that's kind of my next step, is really going in hard on expanding that deal flow.
Neat. Another thing you might do is, as you talk to some of your more trusted team members, you might even ask them if they know anybody that does private lending on real estate investments. And put it toward the end of your conversation. Say, I like to ask this question in many of my conversations, just because I'm always looking for financing. Do you know anybody that does private lending and would be interested in somewhere around 11 to 14% return? Do you know anybody that I should have a conversation with about that? And every now and again, you ask it. I think the importance is they can connect you to somebody, but it's also just important to get used to hearing no on that. I feel like you end up getting connected to a productive conversation once out of 10 or 15 times you ask that question. And so not only will the other 14 people remember you, you might not get a deal that time or someone connected to them, but now when they think private lending or real estate, they're going to think you, right? So if they bump into somebody, they might connect you in 6 months or so down the road. And I've had that happen before with someone who said, I don't know anybody. And then 4 or 5 months came back and said, hey, we got some money. We had some investments do really well, and we're interested in finding a property. So that's just something to kind of throw out there, that I'll typically throw out there. I'm either, toward the end of those kind of conversations, I'm asking for one of two things. I'm either saying, do you know of anybody that's looking to sell or would be interested in liquidating any of their portfolio? Or do you know of anybody that has some money? Essentially, I'm asking them for private money, or whether they know somebody that would be interested in liquidating.
Okay. Yeah, that's good. I'll probably go back and put that on my template for interviews and stuff. And I'm probably going to reprioritize my next steps, is start looking for more private money now, and then increase deal flow after that.
Right. Yeah. Sounds good. Awesome, man. All right. What other questions we got? Go ahead and raise those hands. I'm going to hop over to Coleman really quickly. I want to hear about your deal and let you tell everybody how everything has gone. Give them an update. There we go.
Oh yeah.
How we doing, man?
Doing good.
Good.
Doing good. I just put in the Slack group. Got the first rental property rented out this past week.
Cool. So I know you and I have talked about it because we got to celebrate a little bit together, but give us a rundown of the numbers, what you bought it for, rehab, how long everything took, and then what you thought it was going to rent for, what it did rent for. Give us the story.
So went under contract on it at the very end of October, and bought it for $64,000. Rehab was $20,000. So I through a private lender got a loan for $90,000. Gave myself a little bit of wiggle room for the first deal, which came in handy. It should ARV for between 135 and 145. So I went with 140. Thought originally it was going to rent for between 1,200 and 1,400, ended up renting it out for 1,350.
That feels good.
It does feel good.
Yeah. Yeah. Being surprised in a good way is a good thing. That's awesome, man. Cool. What are a few things, like one or two things that you learned through the rehab process that might be beneficial to somebody that's getting ready to hop into that?
I think the value of communication, and like Jared just mentioned, like phone calls are not always fun, and I enjoy doing face-to-face conversations much more. But it means a lot. I'm sure a lot of contractors don't have people calling just to check in and say, hey, and how are things going, from a genuine standpoint. And so it was good to be able to just have clear communication with the contractor, and just periodic check-ins, see how things were going with the rehab. And also, we're friends on Facebook, so I see things about her life as well, and can ask her, like, oh, hey, how's how's your kid doing? How's how are things going with family and things like that. Just kind of establishing a relationship has been, I think, rewarding. I think she hopefully gets excited when we talk, and knows that it's, I'm not an uptight, demanding person, but someone that, I want this to be beneficial for her as much as I want it to be beneficial for me as well.
Yeah. That's awesome, man. That's great. So you mentioned renting and everything. When you refinance, what do you expect your cash flow to be?
So when I refinance, I'm expecting to walk away with about $10,000 and cash flow about $460 a month.
Heck yeah. That's awesome, man.
Yeah.
What are you going to do with the 10 grand? Are you putting that into another deal using hard money, or you guys going on vacation?
Yeah, I'll probably, it's either that or Mexico. So we'll see.
We'll see.
No, I think as of right now, we'll probably put it into hard money, or just put it back into the real estate account, so we can be better equipped to handle the 10% down on some hard money loans.
Yeah. Neat. Well, that's awesome, man. Sounds like a big win.
Yeah. Closing on 2 more on Friday.
That's awesome. And how are you funding them? With hard money?
With a hard money lender. So working with a guy over at Wildcat Lending, and it's 3 points and 12%, which is a little bit higher than what I would have liked, but the deals are good. And so I had a mini panic attack thinking about being, out 15 to 20,000, and then realizing, okay, at refinance, I will get to pay myself back. I'm okay. And so I've got another lender as well that I could, draw a little bit of that cushion if needed. So
yeah, well, that's awesome, man. That's great. Well, keep us posted on how the property closes go, and if you've got any questions, we're happy to help.
Will do.
Awesome, man. I'm excited for you. Awesome. What other questions we got? Hopefully Coleman's big win and his story is an encouragement to you guys. All right, I'm going to hop back over to Coleman. Here we go.
Sorry, I forgot I actually had a question.
What's up?
At what point, I'm thinking about having, multiple like insurance policies at the same time, with, transitioning like the builder's risk policy on this property over to a landlord policy, but then also starting 2 more builder's risk policies for, 2 more constructions that'll be happening, hopefully starting next week sometime. At what point, or have you thought about like an umbrella policy, like just and really what more does that look like for, getting multiple properties and having insurance on all of them?
Mhm.
Is there a benefit to lumping it all under an umbrella policy? What are your thoughts?
Yeah, so that's a good question, and there's probably some benefit to talking about like syntax and the specifics of what we mean when we say certain types of policies, because one benefit that I have seen is putting all of my insurance with the same insurance provider. So I actually use Allstate because I've got my car, my wife's car, our house, and then I got bids from a few different people and put them all under one policy. So I pay it all once, and then it's taken care of. I don't have to add any administrative overhead with that. The umbrella policy would be a personal umbrella policy. So it would protect you specifically. It wouldn't necessarily protect an umbrella of properties. So while in effect it may have the same result, the policy is affiliated with you, or it's attached to you, not the properties. So when I say it might have the same result, think about it like this. Let's say you've got a property that you're closing on, you're doing rehab, and someone gets hurt, and you're found to be negligent. It's your fault, and they sue you. The initial insurance policy, if you did have insurance on it, it would go through your insurance provider for that property. But if you didn't have insurance on that property, it would then roll up, say they would sue you, and your personal umbrella would catch that. And so they're really separate things, but they serve the same task. So one of the reasons that I have an umbrella policy is that I have some properties that are under my name and not my LLC. So I don't have the liability protection using my LLC. The other is, as you get more and more properties, you're more exposed to risk. And so my policy is, I think, a $2 million policy, $1 million at a time, and it's like $30 a month or something like that. And
Yeah, that was another thing. Sorry, go ahead.
No, and those expenses can be, captured in, and they do decrease your cash flow a little bit, but they're also deductible expenses. So,
yeah, and that was another thing of like, at what point? Because right now, like, this first property is under my name. I'm putting the next two under my name. I know you and I have talked about that a little in the past, and I know you've got a good number under your name. What, this would be a much larger conversation of benefits to my name or LLC. I mean, when I get to 10, it's irrelevant, but
yeah,
besides
I would say
break,
put it under your name as long as you can, particularly right now, because the rates are ridiculous.
Mm-hmm.
I mean, the rates are, my brother Douglas just got a refi quote, and I think they quoted him 1.875 or something crazy. And he bought it down a little bit, but that's just wild. And so I think
we just refinanced our personal house at 2.5.
Right. Yeah. It's just crazy. So that's one benefit. But once you transition, if you were to leave your job and not have a W-2, or let's say your debt to income was too high, then you might need to put it on a commercial loan or under an LLC. And to be clear, you can get a commercial loan even if a property is under your name.
Mm-hmm.
It's just the way that they essentially underwrite it, or how the loan is associated. Now, some lenders will say we only lend to entities, we don't lend to individuals, and that's just a constraint that you can work around. But there's more than enough lenders out there that will be able to lend to you. So I would say for these, I would put them on your name, because
as long as I have like an individual insurance policy on each property, then I'm good.
Yeah. Yeah.
Great. Thanks so much.
That's great, man. It's exciting stuff. All right. Who had some wins this week, or you've got some questions, or potentially you had a headache of a week and you had a few setbacks? We can talk through how to process through them. I think one thing to consider, just while we're waiting on any hands to be raised, is a lot of people, ourselves included, myself included, will often say, well, I'm really stressed, or, you know, that there's too much going on. Oftentimes the word stress is really just a, a synonym for fear, but it's used by achievers. So they say I'm stressed when really they're scared of something, or they're actually tired. But so when you're thinking through these deals, if you're running into seeing really good numbers on a deal, something that logic would say this is a good deal to go after, and you're not going after it, ask yourself why. And so ask yourself, why am I not going after this? And if the answer is, I don't have the money, that's fine. Now focus in that area and go find the money. But if the answer is, well, I'm just, I don't have the money, but you actually do have access to the capital that you need through a hard money lender. You're already approved, or you've had favorable conversations with them, and it would work with the hard money. Then start asking yourself some deeper questions. Is it that you're scared of losing money? Is it that you're scared that your numbers are wrong? Is it that you're scared that you've never been good with money and you need to be taught how to, or you're scared that you're going to do a poor job? So I just encourage everybody that as you're working through some of this stuff, particularly money, not everybody has a good upbringing or experience with money. So as you have those types of triggers jump out at you, and you can identify them, that's a really good spot. In general, my students that are the most successful are the ones that can identify the social and emotional experiences that they're having and be able to label them, instead of saying, I'm concerned that the numbers won't work out, when the numbers say that they will work out, and really you're just scared of a deal not going the way that you think it should, or you're scared that you don't know enough or whatnot. So as you guys experience those things, make sure to put it in the Slack, or we can talk through it on the call either today or at a later time, because I think that type of awareness is really, really needed for you as an investor and as a business owner in the end. So that's just something that I've been thinking about this week, particularly a little bit today, that I've been processing through. So with that, what other questions we have? Or if you're in a position where you don't have a specific question and you want to just give a status update, and I can help process through where you're at and what your next steps should be, and work through any challenges or obstacles, we can do that as well. All right, I see Bill. I'm hopping over to you.
Hey, Blake.
How we doing?
Good.
Good.
Coleman, congrats, man. Those are great numbers. I want those numbers. Yeah, Waco's not cash flowing that well. I have handicapped myself a little bit. I am buying some of these in LLC, and basically I'm changing my mortgage amortization to 20 years and my rates up to 6%. So it kills cash flow, but I'm in for the long term, and I can choose to buy it under my name or whatever. But anyway, those are awesome numbers. So congrats. I just want to give you an update. Last week, I told you I had a backup offer on an MLS property, and MLS, I feel like that was just kind of like a fun playground, because I never thought I'd really going to get many properties on there from everything I read. And the first offer fell through, so I'm in. I have my 10-day option period started on Saturday, and my contractor's going in, I think, tomorrow. And I also had a nice benefit working with the agent. I kind of wanted to throw this agent a bone too, because I've been getting a lot of data from them without much in return. I want to help them out. And agent scheduled an inspection and said, hey, the seller's agent shared the inspection they did prior, and it was the same person that they hired. So I just saved myself $300.
That's awesome.
And I can send that off to my contractor. I'm like, wow, I didn't know they did that. Obviously the contractor's probably pissed because they lost money, but he doesn't know.
Right.
So yeah, we'll see how this MLS one goes. Blake, you kind of helped me with some of that analysis paralysis with MLS, because I did this all on my preliminary numbers. And what's nice with that huge period you can negotiate is you can just bail at any point. Like I think I'm at $100 if I bail. So my rehab was based on the pictures I saw. My rent was based on just my history. And if I'm not close on any of them, I can
That's
get
fine.
out. So
Yeah,
I like this. Like I can just go dance, and I have all this time. And
well, the other thing you can do is, not only could you just bail if the numbers don't work, but if the numbers are still pretty close, you can say, hey, I wasn't aware that we're going to need foundation work, or that the roof was going to need repair, or any of those types of things, and say, so can we bump it back $2,000? I don't want to nickel and dime you, but I also want to make sure that this is a reasonable investment for me.
Right.
So that's another benefit, is you essentially add another negotiation period in there. And particularly it's super helpful for markets that we're like the ones that we're investing in that aren't huge metropolitan areas. Cause like you mentioned, your option fee is $100. The option fee in Abilene historically is $50. And so essentially I'm paying $50 so that nobody else gets to try,
Right.
to protect my investment. So yeah, that's another really, really helpful strategy in finding properties. And it almost gives you a little bit more, less of a rushed experience, if you will. So you're like, okay, I've got 10 days to figure this out. So now let's try and figure it out. So,
right. Yeah, because of this, I added a new column to my spreadsheet. It's kind of like my lowball offers.
mm-hmm.
And with MLS, and now I have that filled in, and I have no excuse if I'm sitting here not doing anything. It's like, here's my list of MLSs that are just on like the no list. Drop it 20K. What can I lose? And just throw them out there, and one will hit. And this one I asked, it's 10 under.
Mm-hmm.
So we'll see.
That's nice. Yeah, that's great. That's awesome.
Thought I'd share that. Yeah, no questions. I guess it'll all come up once I enter the rehab. But there are benefits of the MLS too. The agents are doing all the paperwork that I am usually taking care of. So it's just I sit back and I don't have to stay on top of it. But I'm not going to get too complacent.
Yeah. What is the other duplex? Has that one completely closed, or are you still in like looking for title?
No, that one's closed. So we gave them, I think last call, I'm trying to remember the exact date, but we gave them a 60-day notice because we were basically booting them out because I need to do the rehab and get them out. So we agreed upon 60 days because I wanted to be nice in the winter. And so I'm waiting on that. So I think, I'm going to wait for all the construction. I'm going to get my landscaper in there because I need to get some of the branches off the trees for insurance. I'll do that now. But at 60, then we'll do the whole screening process once the contractor gets in there and does his thing.
Yeah.
So that one's closed and done, and just I'm collecting money because there's tenants in it now. It's just I'm probably at 1%.
Right. It just helps you float it. Yeah.
Exactly. Yeah.
Neat. That's great. So what are your biggest obstacles? Are you feeling like you're in a pretty good spot?
Maybe I was a little too optimistic last week. I said I was finding some good deal flow, but right now on all my yes column, there's like one from a wholesaler. So that has dried up. There's still some pretty good opportunities on MLS, but the wholesalers seem to dry up. I've been talking to them. I'm still keeping that network up, and I might drive up and have lunch. But so that's kind of hurting. But I haven't eliminated all these MLSs yet. I'm just trying to make sure I don't run out of my own money. And second, I think I mentioned my property manager. I had some issues.
Yeah, where's that at?
So it hasn't progressed too well. Long story longer, my property manager and agent, and there's a title company all in the same building. So it's a Keller Williams building. The person that owns all of it owns this property management company. So I have a relationship with my agent, and I called her and I said, hey, I need to just talk to you about our property manager, who she knows really well. She just said, I understand. What was nice is the COO of the company requested to talk to me about the issues because I think they maybe know and want to make some changes. So at least they respected that and heard it. They know where I'm coming from, and I said, look, I'm going to go shopping. I don't know what I'm going to do with these new property checks because I don't even have new tenants in there. So it's like right in the middle. I didn't want to pull the rug out. So I'm like, I'm leaving them for now, but I'm shopping for a new one because this MLS property, I think I told you, that I have right now is the one that she didn't get back to me on, and I lost first position. So I called 2 property managers, and I'm networking with another investor who's connecting me with his. And I'm not rushing into it because I guess I do want to hire slow. Unfortunately, I haven't fired fast yet because I still need my current one. But unfortunately, one of the ones that I liked from previous has not called me back or emailed me back. And the second one, he emailed right away and he's in the running. And the third, I'm just waiting to hear back from my other guy. So I'm not worried. I have someone in place that's going to manage what I have, but that's a hurdle to just get me the numbers and kind of vet, the areas that I'm looking at, et cetera.
And you've got the CEO's number, or at least you've got
COO. Yeah.
Right. The COO's information. Yeah.
Yeah.
That's great. Now, if anything comes up, you can just hop to the front of the line.
I got the bat phone. Yeah.
Right. Yeah.
Now, it was great that he called and gave me all his time, and appreciate it. So
yeah.
I don't know if they're firing or what they're going to do, but it was nice to get that reaction instead of like, peace out, we don't need your business.
Right. Yeah. Man, well, that's exciting for you. What this will be 5 units or 5 doors in 4 months or what?
Yeah, 5 since I guess I joined you in July, but yeah.
Yeah. And I feel like for the first couple months, you were still working through some analysis paralysis. What do you think it was that that clicked, or what was the trigger for you?
I think it was my team. I remember the first opportunity, I found somebody on Facebook who said, I have this property. I was like, oh, this is pretty cool. Cause like, it's not even a wholesale. Like I'm one of the first to respond to it. And he was actually really aggressive with me. Like, so what's the deal? And I said, I was playing it off on my experience, but my property manager drove by it and gave me her opinion, but I didn't know a contractor well at the time, or else I would have had him in there right away. So I was just shocked at the numbers, and I don't know what it was. But I think if I had a contract in there, I would have felt a lot better. And I think the third piece that I've done so much better on is doing comps.
Gives you a higher level of confidence that you're not going to be making a silly decision.
Yeah, I mean, the risk and missing a comp is you guys are running these numbers. Like if I miss, I'm out 20, 30,000, like it could be such a swing. And so just your methods of getting your bounds and getting best case, worst case. And now started using PropStream, and I attended their webinars, and there's things that I didn't realize. Like the MLS people can actually draw a map. And I thought they were just a box. You can draw a map in PropStream. You can draw streets and do whatever you want and start eliminating, and learned a lot more about the cash offer thing. So, and my confidence is growing every time. I feel like I can estimate rent within a couple, like probably $50 to $100 now from my property manager. Yeah, once I get there, I'm not going to need them. So I knew I needed time. I needed that experience with that Facebook opportunity to realize what I didn't know. I just had to kind of realize my fears and figure out what's holding me back.
Yeah. Well, that's great, man. You're killing it. You're doing great. So I'm excited for you. I think one of the other things is, God, who was I talking to? I think I was talking to Jarrett about this, and he was surprised at how little risk there actually is in real estate because using the model that we're using, because let's say you buy a property at 50, you put 20 into it, and you expect it to appraise at 100. And let's say you were 15% off, which would be huge. You're 15% off on your numbers.
Yeah.
Right. And it only appraises for 85. Now you've got a decision. You can say, okay, well, I either refinance this thing and I leave some money in, or I just sell it. And you end up, let's say you've got $5,000 in a total of, interest plus a sales commission that you'd have to pay to a realtor. You're still walking away with $8,000 or $10,000. That's a pretty good worst case scenario.
Exactly.
Most worst case scenarios are not that favorable.
Yeah.
So, so the exit strategy being essentially a flip infuses some more money into your pipeline and into your, bank account, and then could potentially help you get into another deal. So that's great. I'm glad that you've experienced some confidence on the comp side, and that's allowed you to jump into more properties.
I can tell you too, I don't see any hands yet, but one thing that advice you gave me that helped is I'm running a lot of these analysis, like the deeper analysis. And I don't know why I was just running one column for everyone. And so I started doing a best, likely, and worst, maybe to the point of Tyler, whoever, if you can live with the worst case, and it's like pretty low, but if you can live with it, then there's so much more upside. So just getting that range is better than me just looking at one number. I'm like, oh my gosh, if I'm off on one, I'm screwed.
Right.
So it just helps you understand all the variabilities, because then it helps me determine, should I throw this in my LLC? Should I do it personally? What's my insurance risk? All that fun stuff. So
well, with LLC, I know you mentioned this, but there are lenders that will do 30-year amortized product on a commercial loan, but they are fewer and farther between. The one option is, I know some hard money lenders will do a 30-year fixed rate
Oh,
for a commercial loan through the hard money organization. Now their interest rates are higher. They're
right.
5.75, they're 6.25. And at that point, you've essentially got a decision between, do I want higher cash flow and a little bit more expensive interest, or am I comfortable with a moderate cash flow? Instead of 350 a month, maybe I'm getting 220 a month, but I'm paying down my property value or the actual principal a
Right.
lot faster, so that in 5 or 10 years, you can either refinance or you can cash out refi or whatever. So it really just depends on what your strategy is. I know some people in the group are more oriented toward, I want to hold these things long term to get my kids' college paid for, while others are saying, I want cash flow up front, not just some cash flow, but my main priority is cash flow.
Right.
Um, so yeah, so that's something to consider too as you're refinancing.
Even in the BRRRR, I'm surprised at how many variants of that.
Mm-hmm.
Any real estate person is going to say, yeah, what are you investing for? Appreciation or cash flow? But yeah, even with what I'm doing, there's decisions I can make that change maybe a couple $100 a month. It's pretty
Mm-hmm.
interesting. I kind of like that. So under mine, they're 20 years. So I'm like, well, I'm going to take a little penalty now, but I'll have gravy later. And, I want something to pass down to my kids. So I'm not in a hurry to cash flow it now. I'm still going to work for a little bit. So just, yeah, my situation's totally just different than everybody
Yeah.
else's, but
Well, and
once you
you may
understand
end
that,
up
it's easier.
also, if you work with a lender, you could cross collateralize. So let's say you've got both these duplexes are $200,000 and you've paid them down a little bit faster. So you're at 50% LTV. So you essentially have $200,000 worth of equity
Right.
between the two properties. Some lenders will let you cross collateralize that, where most of the time you've got to have them under the same lender that is going to provide you that money. But essentially, you can then take that equity and say, I want to use this as my down payment on another property. So let's say you find another duplex at $200,000 and you got to put $40,000 down.
Right.
Instead of pulling cash out of your own pocket, you just use the equity on those other properties. So your loan to value goes up, but you're essentially able to jump into a turnkey property without using any money out of your own pocket, because you're able to use the equity of these other properties.
I think I need to explore that more with them. My
Yeah.
first hard money guy was using his line of credit basically to loan me.
Mm-hmm.
But I plan on doing the first few with the same lender. So yeah, I should have that conversation.
Mm-hmm.
Do you know, is it a line of credit, or will you have to go through this horrible process of like a HELOC, but joining them together?
That's a good question. I think it depends on how they'll instantiate it and make it effective, because you could essentially put it under a portfolio loan and wrap it in. So one way that you could do it is, you've got those two properties under a portfolio loan. So your loan initially was $400,000 and now you're down to 200. And essentially you just wrap this other one in. So now your loan is for $600,000 and you still owe, 400 or 440 now, because you're wrapping it in.
Yeah.
But now you've got it extra in your portfolio loan. That's one way to do it. The others would essentially be a line of credit that's secured by the interests on the properties. So it's secured by the equity in those properties. So it depends on how a lender would actually do that. I don't know that I've got a real preference on which model to actually go with. If you're looking for, I want to move really quickly and I want flexibility of my money, a line of credit obviously is going to be way more flexible.
Right.
But if you're saying, I want to be able to just lever up as quickly as possible and continue to expand, you put a BRRRR property in these things at a really good rate and you end up at 60% LTV on that property, you're not going to come anywhere near the 75 or 80% LTV that they need in that portfolio loan. So you're able to continue to lever up, especially as I'm a firm believer that over the next 3 to 5 years we'll see a disproportionate amount of inflation, just because of all the money that we're printing.
Yeah.
And that's good for people that own real estate, because in inflationary economies, the asset class that holds its value most effectively is real estate. And so while you might have bought this thing for 200 and you've got a loan for 150, when your property value goes up, your note doesn't. Right. And so you've got a little bit more, you're able to pay it off easier essentially. So that's a good thing for you. So, but yeah, some options. I will say cross collateralization and portfolio loans isn't something that all lenders do. It'll take you a while to find a lender that is creative. Usually the bigger the organization, the less creative they're able to be, because one, they've got so many rules, and two, when you're hired into a large organization, you have a very niche, very specific role, right? So you've even got loan originators, not people that service the loans or that stay with the life of the loan. They're literally just the loan originators. Or, in some organizations, you don't have people that manage an entire sales cycle. You have people that find opportunities and then hand it off to somebody else.
Right.
And so that becomes more challenging on the lending side, because your expertise is now this, instead of knowing the entire process and saying, well, we could pull from over here and we could do this. And so that's where it gets challenging. So the regional and ideally the small local banks are the ones that are going to be most flexible. And in general, they're going to be most likely to scale faster, because in fact, I was talking to a friend of mine who's scaling reasonably quickly for where he's at in his investing career. And his lender that he's got, I think, 5 notes under, they essentially said, hey, they were constraining them even more. And so they kept constraining him to the point where they said, well, we will refinance out all of the money, up to 80% of the money you put in the deal. So you've got to leave 20% in.
Okay.
And he's like, well, that penalizes me for doing this the smart way,
right.
Essentially. And so now they're shopping for another lender, because that lender essentially told them in as many words, you're moving too fast for us. And it's not because they can't originate the loans or whatnot. It's because they perceive, real or unreal, I don't know, but they perceive risk from moving too quickly. And potentially that's because someone doesn't understand how to protect themselves from over leverage or whatever it might be.
Right.
But so the bank that gets you from 1 to 5 or 1 to 10 might not be the one that gets you from 5 to 50 or 10 to 100.
That's good. Yeah, my first ones I interviewed were bigger, and I heard that. Mm-hmm. That you have to leave equity in, and this one I think is pretty small. It might be big for Waco, but it's generally small. So we'll see how the scale goes when I get there. But this helps with my future conversation with them.
Good, awesome. Well, you're killing it. I'm excited for you.
Thank you.
Cool. Awesome. What other questions we have? Got a couple success stories and with Bill and Coleman. What questions do you guys have for where you're at in order to be able to make the progress that you want to make? Brian, I see you raising your hand. I'll hop over. All right. Yeah, Brian, how are things going?
Good. Sorry, my camera's not working well today, so
no worries.
Apologize for that. Okay, so I'm probably doing things like maybe not necessarily in order. I just haven't really had a ton of time to continue to watch your videos and everything else. I'm trying to get there, but just been kind of busy and everything else. So I'd say within the last week or so, I've kind of gotten a lot of different deals. Most of them, I look at and most of them don't make sense. But what I have seen is there's one right now that I just met this guy. It came from the contractor that I interviewed, and he's going to take a look at a couple places. Another wholesaler is trying to liquidate a little bit of his portfolio, so he's going to go look at a couple. But he referred me to this other one, and so according to this guy, the sellers tried to sell it on MLS, and the deal just fell through. So they kind of just want to get rid of it quickly. So he's claiming to me that it appraised for around 110. It's turnkey, although he sent me the pictures, and it's fine, but it's a little outdated. And he's asking 78. So I'm sitting there thinking, if I can get my 20% right, in right
Mhm.
away, it might not be a bad idea to just, pump it in. And this guy says he's a realtor over there too. So he said that he knows a lender that you don't even have to wait. Like he said, they're a newer, bank. So it's not like you have to wait to 6 months. I can refi really quickly. So that actually got presented to me today. So I'm definitely considering it. Because to me, you don't even have to worry about any, construction and everything else. Um, like I said, I'm considering that. I guess kind of what I meant by, saying I'm doing things a little bit backwards is um I mean, I'm working on my team. I wouldn't say that it's, 100% and I'm super confident with it. Also, I guess maybe you can give me a little bit of guidance on project managers and everything else, where to find them. And that probably is in your course. Like I said, I probably haven't gotten there. And that's kind
Mhm.
of what I feel like I'm a little bit, backwards and not, I guess doing things in order. So I'll see, what your thoughts are. Maybe you can kind of point me in the right direction, see what you think. And then I guess we can see from there.
For sure. Yeah. There's a certain almost curious value to not doing things in order, because and I what I mean by that is just kind of jumping in and doing it and then realizing, oh crap, I've got to find a team, or I got to find a lender, or and it really forces you to get in and get going. So I like this. So a few things that just come to mind while you're talking. When you say, struggling to find the time for the videos, one thing I might encourage you to do is listen to it on your phone. So when you're driving somewhere or you're working out or whatever, bring it up on your phone, and it will, you can use cell data or whatnot. Particularly if you've got unlimited data, this is best, but just listen to the audio. Of course, if you're driving, watching video isn't a great idea. So just listen to the audio and listen to it, and then watch it again. And rewind if you've got some questions or you actually need to look at it. But that opens up a lot of additional, particularly as you're, a realtor, you're probably presumably driving property to property pretty reasonably. So if you don't have to put your brain on other things like thinking about what the next showing is and what the specs are and all that stuff and how to position it to your clients, then you might consider listening to it on your drive. So that's one thing. The other thing is, if they've already got an appraisal on the property for 110, ask them to send it to you.
Yeah, I
And
did that. I'm waiting on it. I did. Yeah.
good, good. Okay, yeah. Because if it really did appraise for 110 and you can buy it for 78, I mean, it looks like a really good deal. And so to appraise at 110, you've got it at a 78 asking. Make sure you get connected to that lender too, no matter what, whether you get this deal or not. If
Yeah.
there's a lender that will turn things around for you pretty quickly, I recommend getting in touch with them.
Mm-hmm.
Um, yeah, so that's those things. So when you're looking, I think the project manager isn't your number one priority right now, but I will tell you how to find them. I think your number one priority is a contractor, not really even property manager, as long as you can get a rental comp validated, but really a contractor, and you've probably got a realtor there, and you've got enough insight from your realtor experience to be able to draw from. But so I would prioritize those first. Then when you get to project manager, if you need to start a project without a property manager just to be able to get it, that's fine. You can find property managers or project managers all over the place. You could use your property manager and ask them if they'll manage the project. Some property managers just do this by default. I was talking to an investor recently. He said his property manager fronts the expense for the rehab, and then
Wow.
he pays them back. So if it's a $20,000 deal, they pay the contractor. They manage all of the interactions with the contractor, and then they say, "Hey, we just paid so and so 5,000. Can you send that over?" And essentially, he's paying for it about when the task is done, rather than up front. So some property managers will do that. Some realtors might be able to help you out. Wholesalers do this pretty frequently. The project management side of things, they'll charge a fee for it, of course. similar to anybody else. But if you're talking with wholesalers or you've had conversations with them, you might ask them, do you do any project management? If you were I'm an out of town remote investor, would you be willing to manage one of these properties? And what I mean by manage the property is, and then explain it, drive by it twice a week, send me pictures and videos and give me updates. That's all I'm asking for. Oh, really? Well, that sounds pretty doable. What would you do for that? Well, what do you think is reasonable? $500? Okay, great. When everything's said and done and the rehab's done, I'll cut you a check for $500. So that's another way. But one way that I think is one, it saves you a little bit of money and it helps you and the investment community, is if you're in a Facebook group or a real estate investing group, whether it be a meetup, Connected Investors, Facebook, whatever it might be, and there's someone that says, hey, I'm new here, I'm really looking to learn, I'm hoping to kind of get my feet wet in this area, send them a direct message and say, hey, I'm a remote investor, I invest in properties from away, so one of the things I'm looking for is someone to be my boots on the ground. If you would be willing to swing by a property twice a week while it's under rehab, and then maybe, go give me eyes on the property whenever I'm finding a new one, and that would be once a week or something like that, I will teach you how I do this. I'll kind of help you, I'll let you walk through the process with me, and I'll give you any knowledge. I'll let you ask me questions, and commit the right amount of time. If you don't have time for it, just be clear with what you're expecting and what you actually can give them. But I did that. My first project manager was a guy at a local college who I said, I'll teach you what I know, and I'll let you just kind of be along for the ride if you'll do this for me. That'll really help me out, and it'll be well worth me giving you, taking an extra 20 minutes on a call to be able to explain something to you. So that's another way that you can do it. Just look for those types of comments. And if you don't see any of those comments in your group, just ask something, who here is new and looking to get their feet wet in investing in your market? I'm sure you'll get, anywhere from 2 to 5 comments of someone being like, I have no idea what I'm doing, but I'm wide-eyed, ambitious, and really want to get started, and I don't have any money. That's perfect.
I've kind of been doing that indirectly, not with the project manager side, but a few of the people, like you said, will say I'm new here, so I've kind of direct message them to try to say, to get in with them, and once they find deals, so it's just an extra question or two, so that definitely should help.
Yeah, that's great. Yeah. But yeah, I think that, the deal sounds really attractive if those numbers actually are true.
Yeah.
So I would, in situations like that, when a deal is really attractive, I try and get under contract as quickly as possible.
Okay.
And even if you have to say, hey, I'm fine going under contract right now. If you've got that appraisal at 110, we can get under contract right now. And if you can't send it to me right now, just send over a contract and we'll sign it with the stipulation that you've got the appraisal.
Okay.
Does that help?
Yep.
Cool. Anything else?
No, like I said, I just been, a little busy and deal analyzation pretty much. So, I have tried to also do the same thing, doing a little workout, listening to some videos, but apparently I'm not working out enough. So I haven't watched enough video.
Yeah.
But yeah, that's it.
That's great. That's great. Well, you're making good progress. What's your biggest obstacle?
I guess, to be honest, and it's probably the hardest thing, just officially kind of trusting everybody and trusting my contractors or whatever. I kind of feel like everybody seems friendly, nice, whatever. But until you actually do it, I'm just still a little afraid of it. But honestly, other than that, I think I've mentioned this in the past. Everything, seems good. I like doing it. It's just until you get like 1 or 2 under your belt, it's always, at least for me, it's going to be a little scary.
Yeah. The distance from 0 to 1 is way longer than any of the others. I would say the distance, and Bill's nodding his head, the people that have a property under their belt, it just, for some reason, there's something that clicks and you're like, oh, I'm a real estate investor. I'm not pretending to be a real estate investor. I'm investing in real estate. I have an investment property. And so whether it's that or something else, like actually knowing the process, I'd say the distance in effort between 0 and 1, the distance between 0 and 2, or 1 and 2, is like 30% of 0 and 1. Because not only do you have the intellectual barriers, you also have the relational barriers, not having the right team, but then you also have like psychological barriers where you're saying, I can't be a real estate investor. I don't have the money to do this, or I'm, you're kind of almost psychologically psyching yourself out, as it were. And so, run the numbers, but don't psych yourself out too much. When you find a good deal, send it over, let other people hear, myself included, help curate it and kind of give you the thumbs up and other direction. But it sounds like you're making good progress.
Okay. Thank you.
Cool. Awesome. Well, let's do this. Let's take a break real quick. I'm going to run and use the restroom. And while I'm gone, you guys come up with a few different questions and we'll hop back in. We'll start back up in, let's say, 5:40 Central. So that's 4 minutes. And so you guys just come up with your questions and we'll be ready to roll. All right. You've had a little time to think of some questions. Nayeli first with her hand up. Let's hop over. I've been wondering how things are going for you, Nayeli. How are we doing?
Hey, Blake. Pretty good. So I'm calling. Well, I wanted to ask a question on private money. So let's say I'm trying to do the 25 and I'm using the calculator that we have. I'm getting a little confused, like how to bring up the lender return calculator, because I'm only needing a portion since we're doing the rehab, but I was going to ask for the other amount of 25, and I'm doing it at a 11% rate for 6 months, but I'm kind of confused. So am I making this monthly interest payment to them, or how much do I pay them?
Yeah. So is the root of your question, if I take out X amount of loan, how much am I going to be paying?
Yeah. How much should I be paying them, and how should I tell them, like, so they can like understand this calculator better?
Right.
So I can understand it. Then I can present it to them.
Yeah. The way that I use the private money calculator, or the lender return calculator,
Yes,
is essentially to communicate to them what return they're going to get. And it's usually when I'm talking to people that are newer in lending, so they're not as familiar with the process. So that's where I'll use it. Most of the time, in my experience, if you say, I'll give you 10% interest only payments, 10% paid on a balloon or whatever, that's usually enough for them. And they say, okay, well, that's great. But if you're trying to understand what interest payment you pay them, are you going to have an origination point? Oh, you're muted again. Let me allow you to unmute.
yeah. So okay, that's where I was wondering. So we offered the 6 months, and then tell them the full amount would be paid back in a balloon payment. And how typically long do you tell them, like a year or like 6 months as well?
Yeah, I say 12 months.
12 months.
But I'm usually refinancing around month 4. And that's what I tell them. The reason I do 12 months is so that there's no mistaking the percentage that it's annualized. So for example, if you were saying, I'll give you 12% on this note, and we'll do a 6-month note, there may be the potential that, I don't think they should, but there may be the potential for them to say, I'm going to get 12% in 6 months. That's fantastic. When realized, really, that's a 24% annualized rate of return, right? So you're saying, I'll give you 12% on a 12-month note. I'll probably end up refinancing in 3 or 4 months around that time frame. So then at that point, you would be able to use the lender return calculator and calculate how much money they would end up making. And on the other side, how much money you would be paying them.
Gotcha. Okay, that makes more sense. I was thinking, I'm like, okay, am I giving them interest payments and paying them monthly? So I see. Okay.
Yeah, the monthly payment is the interest payment. And so if you're going to pay them monthly, you're paying them
Mm-hmm.
only the interest payment.
Okay.
But if you're going to pay them in a balloon payment, you're paying it all at the end.
Okay.
That's what a balloon
Okay.
payment is. Essentially, the reason they use the terminology balloon is because as time goes on, your debt gets greater and greater, just like the filling
Mhm.
up of a balloon when you're blowing it up. So you started out owing $50,000, but now it's $50,500, $51,000, $52,000 until you refinance.
Okay. Okay, that helps a lot. Yeah, I called Kelly, and um their loans, you have to start at 70, and then this property's 25, and rehab I'm thinking it's going to be like about 25.
Mm-hmm.
So I was like, okay, well, cuz I just got another two from a wholesaler today to look at,
Right.
and I was
Would
thinking,
they?
okay.
So they're probably going to max out at like 75% ARV. But if this
Mhm.
property had a really good ARV, would they loan you 70?
I didn't ask her. I got the properties after. I was gonna call her tomorrow just to see what the
Mhm.
numbers would be for it. But this one's ARV. It's gonna be like worst case scenario 110.
Okay.
Mm-hmm.
Okay. So theoretically, you could get up to, $85,000,
Mm-hmm.
$80,000 or so lent to you. So you could end up doing that, and then just use the balance of that note. You could use that as your 10% down for another hard money loan.
Oh, okay. Let me ask her that, because it said something about starting at 70,000.
Mm-hmm.
So you're essentially telling me that maybe ask her if I can roll it in,
Right, and just
right?
say, I think I'll be able to get out for say $50,000, but the ARV is $110,000. Would you loan me 70 just so I can get this deal closed, and I'll pay you back with it, but get that money up front. The key though is that you actually get access to that money, that you don't have to
Mm-hmm.
provide, a distribute, or they won't distribute it to you based on the amount of rehab that's done, because you're never going to do $50,000 worth of rehab on that property, right? If it
Mm-hmm.
takes 25, it takes 25. And so
Yeah.
you would need that money up front. They may not do that, but it's worth asking.
Okay. I'll ask them
Mhm.
to tomorrow
Yeah.
and see if that'll work. But other than that, yeah, I'm pretty good. I have a wholesaler that's been sending me some things individually,
Mm-hmm.
and she sends them to me first just because I helped her with a
Yeah.
Spanish customer. So she's been really nice and
That's
giving them
awesome.
first to me. So yeah, so hopefully I could. She's like, I'll let you go ahead and try this, for a couple days and see before I let anyone know
Yeah.
about it. I'm like, okay,
Yeah.
well, thank you. Mm-hmm.
That's great. Yeah, that's really
Mm-hmm.
great. Now, when we were messaging back and forth on Slack, you mentioned that private money had a unique challenge for you. Help me better understand
Yeah.
that.
So I work at the bank, so they told us, don't do anything of conflict of interest, but this is my family member, so I think it would be fine, but not, to be asking, on return and stuff. Because I was talking, um, we're not supposed to be trying to tell customers we can earn them more money or whatever, but I wasn't
Mhm.
talking to customers.
Right.
Just, I'm like, I can probably do it, but just with family.
Yeah. Yeah, that's one thing that I was thinking about is
Mm-hmm.
you definitely can't market this to your customers and say, no, 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 hey, don't give your money to the bank.
Yeah.
Let's talk over here. But if you were to reach out to somebody and have a fundamentally separate conversation for them,
Mm-hmm.
that seems like it would be reasonable. So at least in my perspective. So
Yeah,
that's
that's what
something
I
to
thought
consider.
too. That's why I'm like, I think, and then Jorge was telling me we can ask my dad. He can do the other portion, and we can do the other for rehab.
Mm-hmm.
And then even tell him, we'll put him on the lien, and
Mm-hmm.
he's like, let's just present that lender return calculator better. I'm like, okay, that sounds good.
Right.
Mm-hmm.
Well, and you might even consider just keeping the lender return calculator to yourself and saying, Here's what it turns out into. If you loan me $80,000 at 8% with a 1 point origination fee, I'm going to end up paying you, I've got it up right now, I'm going to end up paying you $530 a month for every month that I hold it. So all in all, I'll hold it 4 months. You'll earn $3,000, 11% return. That's pretty good. But some people will want to know more and more granularities, like details. But essentially, if he's okay making $3,000 just by letting you borrow the money for 4 months, that's essentially what you're asking him. What you might do is ask him, what are your other options for this money? If you've got money sitting around, what else might you do with that? Well, I could put it in the stock market. Okay. What do you think that you would, in the next 6 months, what do you think that you could make with that money? Well, okay, I could invest it in Tesla. Well, okay, Tesla's super inflated right now.
Yeah.
Even Elon Musk, and this is a while back, but he said we're way overpriced from the stock's price. So if you're willing to take that risk, that's fine. But if the rest of their investment options are making 4% or 5% or whatever, you've got the best, most compelling option for him. Yeah. And at that point, it's just convincing him that it's actually a safe investment for him.
Yeah, definitely. And that also made me think of something else. So I already forgot it. We're talking about, I was reading something about IRA, like using your IRA. The customer doesn't, the person doesn't, your client doesn't, the private lender doesn't need to disperse it. You can go to like a third party and borrow from there. I was reading it in the real estate group. Yeah. But I wasn't sure how that works.
Yeah, so you can, and just a disclaimer, I haven't used a self-directed IRA to do this.
Oh,
but
okay.
You can use an IRA as an investment tool, primarily if it's a self-directed IRA. So what that means is the money is in an IRA, but you are the person responsible for directing how those funds are used. So usually if it's in an IRA, it's managed by Charles Schwab or some other organization, and they have someone managing your money. If it's in a self-directed IRA, that means that it is your IRA, so it's your retirement account, but you are the one directing where the money goes. So if you are going to invest in a property with your self-directed IRA, you say, I'm going to invest in this property as my investment. That's where I'm directing the funds. That's fine. You can do that. But the returns on that money go straight into the IRA. So you don't actually get that in your pocket to actually be able to use. It goes into the IRA. Now, it's still an investment. It's still going to continue to grow. That's fine. But all of the returns would go into the IRA. The other way to do it would be, let's say that Jorge's dad has an IRA and it is self-directed. He could loan to you out of that IRA with the condition that all of his gains, so this $3,000 we're talking about, is going back into the IRA. But he can loan it to you. Now, you can't loan to yourself from your own IRA. That's breaking the rules. So you couldn't say, I'm going to loan to myself. I would wonder if you could loan to an LLC, loan to your LLC. Okay. There may be some rules around, I haven't read this specifically on the IRA front, but on other lending strategies, there are constraints saying you can't lend to an LLC that's a single member LLC of which you are the primary owner, right? Or you can't lend to an organization that you have more than 50% ownership interest in, or something like that, essentially to make sure that the IRA funds or the retirement funds are being used the way that they're designed to be used. So does that help?
Yes, that helps a lot to understand how that works. Okay, cool. Yeah, and that's I think that's all the questions I had.
Awesome. What's been your experience so far? What are have you guys closed on any properties, or where are you guys at? What are the challenges you're having?
Well, just the funding was the part for me. The first hard money lender I had back last year, they were, I found one, they ended up saying 3 weeks because of appraisers.
Yeah.
3 to 4 weeks. And then, I went ahead and found a new one, and, this one told me, and then I got this one late December. I got her, and she told me, yeah, we can close, 2 weeks, 7 to 10 days. And then at the end, it was the same, 3 to 4 weeks.
Right.
So then I got a hold of Kelly, the one you recommended. So she told me 48 hours. So that's going to help me a lot.
Yeah, they don't do a traditional appraisal process. They do an in-house evaluation.
Okay.
They're usually reasonably conservative, which is why they can do that. So they essentially run their own comps, and they, you show up and you say, this is going to be worth 120. And they say, well, we think it's going to be worth 110. So we'll loan you up to 80% of that, or 75%. So, but that's how they end up being able to close in 48 hours. I mean, I had a great experience with them.
Yeah. Just talking to her, I felt like this one will help me way more. So even when I told the wholesaler, that's when I messaged her. I'm like, oh, I'm going to be able to close now, within 48 hours. So then that's when right away she sent me some deals.
Right. Yeah. Yeah. That's great.
But other than that, that's it. I just was a little bit off because we were starting Jorge's business for construction. And
neat. How's that going?
Pretty good. They already have 2 jobs going, and I was helping him get the LLC for that and get customers, and and set up third-party financing and all that. So yeah, they're good now.
That's awesome.
Now I can focus on this, and then hopefully, they're going to be possibly driving to Abilene. If I find some good ones, they can probably fix them.
That's great.
Yeah,
that's awesome. Awesome. Well, great. Well, keep me posted if you got any other questions. I'm going to hop over here to Dean and get his questions answered.
Sounds good. Thank you.
Of course. Dean, how we doing, man?
Doing okay, man.
Good.
How are you?
Good. I'm doing very well. How can I help?
I sent you that list of lenders, by the way. Sorry about the hold up on that.
Oh, yeah. No worries. I appreciate it.
What was I going to say? Oh, yeah. So my main hold up right now, I think it's 2 things, really. I think that I'm stuck between, I don't know. I'm stuck with really having trouble with deal flow right now. So I've been reaching out to wholesalers on Facebook groups and communicating with them. I could do better. I haven't reached out to 40 yet, but I've been talking to a good number. And what I'm finding is, I don't know if it's just me. I don't know if it's the market. I don't know if it's both, but it's just really hard to find consistent wholesalers in Wichita Falls at this time. And if I am, they're not giving their deals to me. Do you know what I'm trying to say?
Right.
They do have someone else.
Okay. So your biggest challenge is deal flow.
Deal flow. Yeah.
Okay.
So, and tied with that as well is I think my standards have gone up as far as what I'm looking at. And that's not to say I'm looking for, maybe my criteria is too tight, because I found that in the market, the spread is pretty thin, and some of the appraisals can be lower, right? It's Wichita Falls. So what I'm really looking for is, as I kind of said last time, either something with some unused space that I can make extra square footage, thereby just mathematically price per square foot, bringing up my ARV in a much more surefire way, or a duplex and raising the rents and bringing in a new group and upping that whole thing and being able to very quickly see what it'll be worth, because of what it brings in will be more. So I'm just struggling to find the properties that I really want to get is basically what I want to.
So when you run the numbers on the properties that you do find, what are you seeing?
I'm seeing that it would be fine for like a 20% down, or like whatever sort of a deal. But as far as for the burr, with what's probably going to be hard money to start for me, the numbers get tight. And I find myself, best case scenario, coming out clean, and worst case scenario, leaving like a lot of money in the deal. So, and I can see there's one I've gotten close. Like there's some that, I part of me thinks I should just get with my realtor again, just make lowball offers, because I can make the numbers work if I discount them enough. But these sellers are not interested in my offers. For example, like I offered one guy, 39,000. No, 30 to 40,000, 38,000. I need it to be in the 30s for it to work.
Yeah. Okay.
And they're all stuck on 40s. And there's a lot of reasons for it. I don't mean to blab on and on, but I have a theory. A lot of what I'm seeing is like older folks and they need to move on to something else, but there's not a ton available and they need money to get there. So
right. Yeah. Well, yeah, one challenge that is happening everywhere right now is that the market is constricted. So and what I mean by that is there's not as many deals that are active right now, specifically the MLS. So, for example, inventory in Austin, I was talking to a real estate investor and a friend there who's also a realtor. Inventory in Austin is at 0.9%. And he said, I've never seen the market in Austin react this way. And what he meant was appreciate so quickly over the course of the last 2 or 3 months. And so for an example of what he's talking about, there was a house in Pflugerville, and you understand where Pflugerville is. Pflugerville is like north central Austin. Like it's not really Austin, but it is, but it's not. So if you live in Pflugerville, it's Austin, but if you live in Austin, it's not Austin.
Right, exactly.
So he had a 3-bed up there that he put on the market at $380. He got 31 offers. Half of them didn't even look at the house. 31 offers, and it sold for $460.
In Pflugerville?
Yeah.
Wow.
And so that's, of course, that's unique to Austin because the mass exodus of New Yorkers and Californians, they're all going to Austin. Oracle announced they're moving to Austin. Apple built their $1 billion facility. Tesla is moving there. Elon, bought a house there. There's not much there, and people don't want to sell their houses right now because they're not sure that they can find a new house. And so there's just not a whole lot on the market. So that's one of the drivers that you're experiencing. But what I want to do is let me share my screen because I want to look at some MLS deals.
All right.
Okay. So have you seen these deals?
Yes. Yeah,
okay.
Every one of them.
Okay, great. And this one is interesting. You can't really see it, but for 12 grand, it's been on there 115 days. I mean, for 12 grand, if it could appreciate or if it could appraise at, let's say that's a 2-bed, 1-bath, maybe it's a 3-2. Let me look on the side, see how long this house is. Some of them are shotgun style, but if it could appreciate or the normal ARV for a house like that would be,
My realtor was like, this one is bad news because it's not that one in the picture. It's the one that's it's like a frame. Like, I don't think that's the one. I think that's the one.
This one?
Yeah. At least that's what she said. I should check her on that though. Because if it is, she might be wrong. And if she's wrong.
Right. Well, yeah, I mean,
I'll look into it. But
yeah, I would look into that one because you've got a lot of rehab space in there, and like $40,000 can go a long way.
1606 Garfield.
Say that again.
That's 6. What's the address on that one, Blake? 1606.
Yeah, 1606 Garfield Street.
I'll email her about that one.
And
then north.
And essentially, these are like wholesale properties. Like this one's $40,000 and just got cut by $9 grand, which is
I saw that
20% of the value of the house. But
I walked, and it needs a lot of foundation work.
Yeah.
Yeah, I walked it.
This one right here.
Yeah, I walked that one.
Okay.
If here's the one that I would consider putting an offer in though. Check this one out. Keep going down to Wesley Drive. They just cut, I just saw today, and I wanted to actually show you this one.
Right here.
1010 Wesley. They had that was at 55,000. They've cut it to
Okay.
49. And there's a lot kind of more. There's not, it doesn't need a ton. It needs some foundation work, but it doesn't look but it's not so bad. My realtor said she walked it for me.
Okay. So let's try this. Is it changing instead of seeing Zillow? Are you seeing the soft offer calculator?
Yeah, I can see
Okay,
it.
great. So let's say this 1010 Wesley, they changed it on the 13th. It's now the 25th. So you might even be able to offer lower than that. Let's say that you can get it for 45 and it costs, I don't know, 15, which would need to be validated. How much can you rent that for?
$850. Very
Okay.
conservatively.
Okay.
Like
And how much do you think it would appraise for?
85,000.
Say it again.
That's 85,000
Okay.
is what my realtor said.
Okay. Okay. So right now on the cash flow, I think you're in a reasonably good position
Yeah.
because it's near 1.5. Anything above 1.3, I think is reasonable to consider. You're probably looking at like $200 a month, maybe in like the 190 is what I'm thinking. And maybe you drop this to 43. All right. Now you're getting closer. All right. So
you see what I mean? It needs to be like 39,000. You know what I mean? It needs to be like, put it to 39,000, see what it would do then. Yeah, that's more the deal.
Yeah,
and so there's something out there like that I can find.
Yeah,
that I can get.
Yeah, I mean that's a really good deal, but I think it's still a good deal if you can get it. Looking at what's going on in there, like it looks like it's in reasonably good condition. You might not even have to. It might even be rent ready. The outside looks good. You could even close this in, add another bed or bedroom, but it might not be structurally attached, might not be structurally sound. So that's something to consider. But you've already got a 3-bed, 2-bath here at 1,650 square feet. So who knows? Maybe you mentioned this is conservative. Let's just say you can get 950 at 43 with some lipstick on it. I mean, these numbers are good numbers. Like 1.9 almost. And 60% of ARV, that's pretty good.
What happens if you put the ARV down to 80? That would be like kind of worst case scenario.
Yeah. So that's where you need to like validate these numbers and say, okay, what is my worst case scenario? Okay, because if your worst case scenario is 80 right here, and you could get it for 43, which I think is very reasonable. And you would need to validate the rent. If she gives you, it'll be anywhere between 800 and 1,200 for rent. In fact, let's check out what we think that would rent for real quick. Let's go to this. Let me copy the address. We'll go to the rental section of Zillow. Okay. For rent, price, houses, apartments, great. Search for the location, and then we'll just start zooming out. Okay, so that's where we're at. Across the street from a field, I guess, near a highway.
It's in a reasonable part of town.
Okay.
It's near a school.
Okay. So this is a 3-2 for 1041 at 975. It looks pretty similar to what you're looking at. I mean, it's not, it might be a little bit nicer,
Smaller
but
though.
they're in the same area, right? And that's for 1041. Yours is 1650. All right, so that's just one comp though. Another 975, 3-bed, 1-bath, 1218. Nothing special. In fact, yours might even be a little bit nicer, especially if you put some lipstick on the inside. Like, I mean, you do gray paint with white trim, like a Repose gray paint with white trim, and it just modernizes the whole thing. It looks different. So let's check this out. This is 945 square feet for 850. So I think 850 is like, at least what I'm seeing right here is your floor.
Yeah, that's what I meant. That's as low as it would ever be.
Right.
All right, that's actually better than I thought. 975. It could, let's say it could go for 950, like you said. Then 1.86. So that would probably be closer to 200, 250 a month cash flow. Okay. Well, I guess I got to just overcome the fear and just make the offer, man.
I mean, and another thing that I'll mention is you don't have to find, I would encourage you not to find the perfect property, because what that really is, saying I'm looking for the perfect property is language that's actually saying I'm scared of making a bad decision, because this isn't an engineering problem. An engineering problem, like a scientific problem, is it's predicated on the fact that there's one right solution and that there's enough data to be able to identify and discern what that right solution is. This is a design problem. A design problem, there's either not enough data or there's too much data, and there's more than one, like there's a million options, right? Right. If I said, what color should you paint that house? A million different ways. Or how should you design the next phone? There are some bad solutions, but there's a million different correct solutions, right? So let's actually do this. Let me hop into PropStream. Let's see what this thing would actually appraise for. So, because once you get into one, you experience that kind of momentum that I was talking about earlier.
Yeah, that would help. And this would be really great to see, because average comps, and she was right at 85. According to this, the average comp is 85.
Yeah. Now, but what I will say is the comps are like, it's an average. They take a blanket average. So here's what I want to do. Let's go into the details and let's go in and look at the comps. Okay. So right now, the only property that we have on here is that property. So let's open it up to public record as well. Okay. 1103 North Beverly. Okay. It sold, estimated, it's a 3-1, 1400, estimated at 87,900. So I think it's probably reasonable to assume $60 a square foot. So 60, let's try this. 1652 times 60. $100,000.
Golly.
That's very different, right? So I think, let's keep looking at this, but this could be something reasonable. Okay, so a motel. Okay, so this one, let's look at 11. Let's look at the quality of this one. Okay, professional photos. I mean, you can see some deterioration there. Like, it's not, the outside isn't in great shape.
Is that a metal roof up there?
Yeah.
It's that roof. Yeah, it's a metal roof.
Yeah.
Okay.
I mean, it's pretty similar to yours. Yours is a grandma house, right? Someone lived in that house for 50 years. You can see it in the paint. You can see it in the window drapings. Same thing here. I mean, this is interesting. right? I would bet that they laid that drywall themselves. And this thing sold at $60 a square foot. Ooh, that's pretty. Right? I mean, the exposed wood, that might be MDF board.
Yeah,
Right,
man. So the only thing that would have to happen to with this property then would really just be paint, flooring, and I mean, honestly, my realtor said that there were obvious foundation issues
Mhm.
with the floor, but luckily it is pier and beam. It probably just needs to be re-piered. And honestly, like every house in Wichita Falls has major foundation problems.
Yeah.
From what,
Yeah.
So I think that I could just get it worked out. I think that for it to appraise, I would have to do the foundation work.
Yeah.
Would you say that's reasonable to assume?
I don't know that you have to, but it's probably good to. And honestly, though, pier and beam foundation work, my foundation work is like $3,500.
Okay. Yeah.
You're not
that's
looking
what
at 10 grand. It's not slab.
Right. Right. Because they don't have to dig under. They just go, it's raised.
They crawl under. Yeah. Yeah. They've got access to it. I mean, even on this past property that I just did that, I got lazy. I didn't send an inspector in, and I justified it at the time. But yeah, I had a foundation issue pop up. I want to say it was $3,400 as a change order. And that was where there was no beam where a footer should have been. It was, they set the beam, or it wasn't that there wasn't a beam, there was no pier. So the beam was set on top of a stump. And I think we talked about this last week. An actual stump.
Is this the one that was built in the 20s?
I can't remember.
20s house? Okay.
I can't remember.
Wow.
But I mean, that. So not only do they have to put in a pier, they've got to dig out that tree stump, and then they've got to put in a pier, then they've got to re-put on the front, right? So costs can be pretty reasonable. So I think if I'm doing this at like a reasonable level, let's see, how much were they asking? 45?
They wanted 49.
Okay.
They'd originally listed at 55 and they dropped it to 49.
Okay. If it rents for $975 and it appraises at 85, which I think is conservative, you could give them list and it still work. Actually, this is a really good deal at list, but I would offer 43, 45, something like that.
Okay. They'll probably counter because there's probably not 100 offers on this house. So.
Right. Yeah. And I mean, you offer 43 and they might say, no, we'll only do 47. And you say, okay, meet me at 45 and we got a deal.
Okay.
Great. Perfect. And then because it's an MLS property, you're under contract on something for, like Bill said, an option fee of $50, $100. Is it worth $100 to see if it would work? Probably. And so you put in an offer, you go under contract, and then you send an inspector in there and you validate that it is going to take $5,000, $8,000, whatever. And then you can kind of pick and choose what you actually end up fixing up. So you don't have to put in flooring. Flooring can get expensive. Right. So, if we were to look at that property again, where is this thing? And I'll reshare my screen. Here we go. So at 49, that might be carpet, maybe. But that looks like, I want to say laminate, just because I think normally I would expect laminate, but it could be tile.
It could be linoleum as well.
Yeah.
Maybe.
It reflects a lot, almost like tile does. So, but man, you wouldn't even have to replace these fans if you didn't want to. So that's where I would say for you, It may not be. I think you might be psyching yourself out.
Yeah.
You might be convincing yourself that a deal doesn't work before you really even run the numbers.
Well, I had run the numbers on this, but I put the numbers, I'd been going off of what their price was before, because I just saw that they dropped this. And their price before was 55. And I went off of a lower ARV. I was like 80, 85. But now that I see on PropStream, there's comps for up to 100. Like 85, would you say that looks like the floor? Like that looks like a lower number. So
yeah, I think that's the floor.
Okay.
If I were running the numbers, I would feel really confident about it appraising at 85.
Okay. Well then, all right. Yeah. All right. Well, I'm gonna call her tomorrow, and I'm gonna put in an offer then.
Yeah.
Yeah.
Cool.
Thanks for giving me the confidence.
Yeah,
because
of course.
I don't know, just fear of making a mistake, fear of.
Well, and like Bill, I would encourage you to run your best and worst case scenarios, and then your most likely, because it helps you. What we tend to do, and this is true not just in business endeavors, but also in relationships, when you have conflict with someone you care about, we tend to assume that when we make that decision, things will go really, really poorly, and that the upside is only minimal. So we avoid that confrontation. So if the status quo is here, our risk of loss, or our risk of our potential for gain is like this, and our risk of loss is way down here. When really our risk of loss is more like this, and our opportunity for gain is way higher. So allow yourself to see that opportunity for gain, because in fact, I'm going to share my screen with you one last time, and let's do it this way.
That's a good way to put it. Because what am I risking? $100? I'm just going to get it under contract and check it out. And
right. You're risking $100. And then if you go under contract and you fix it up, and let's say it does appraise at 80, you only put 56 into it. You flip it and you make 15 grand.
Yeah.
Right. You just sell it. So looking at this, I think this is a very reasonable, in fact, I would probably say, this is what I would say is your most likely scenario. 60% and 1.7. That's pretty good. Your best case scenario, let's say that the paint trim turns out really well, and you're able to, let's say you can get 1,100 for it. That's probably a little bit optimistic. Let's say you can get 1050. I think 1050 would be reasonable. Here. And let's say they actually do agree to your 43 because they're desperate. And it appraises at 100. That right there, that's probably like a $200, maybe $300 a month cash flow bottom line. And you walk into the deal, right? You walk into the deal you're at a 50% loan to value. That's crazy. Like that's really good. So now your worst case scenario, let's say you can, what I'm seeing, 900 seems pretty conservative. Let's say that they only take 49.
Let's say the rehab goes over.
Yeah.
Say the rehab is 12,000 instead for whatever.
That is a pretty good worst case scenario.
Yeah. I'm not even dead if that happens,
Right. If you've got this lender that'll loan up to 85% LTV, right?
Yeah, that's true. So
this number, the reason why you want 85% or why you want 70% is because you're going to use the difference between what the lender will give you and what you're all in at to pay off the closing costs and the financing costs. So for example, if you were to let me do this. If you were to have a, for round numbers, let's say you bought a house at 50, you put 20 into it and it appraised at 100. You've got $30,000 of equity. Let's say that someone gives you 75% loan to value. That means they'll loan $75,000 on this property. All right. So they refinance that out and you've got the 25 in, so you have $5,000 to play with because you're all in at 70 and you've got $5,000 of wiggle room. That $5,000 goes to closing costs and paying your lender. You're going to pay them $3,000, $2,500 just to borrow the money. So in that situation, you're all in, right? You're all in for no money. But that's assuming a 75% LTV. Now, if you've got an 85% LTV that a lender will actually do, they'll loan up to $85,000. So now theoretically, you could be 80% all in. Does that make sense?
No, that totally makes sense. That totally makes sense.
Yeah.
To be clear on the 85 LTV, one of those banks is no longer doing that of the three that I talked to. And the others are like, yeah, but they'll do it based on you and your setup. So I'm going to go ahead and assume I'm going to get 80 and just hope that it'll be 80. Actually, I'm going to assume it'll be 75 and hope.
Because you can get 75. 75 is all over the place. And you can get 80. It's not all over the place, but they're available.
Sure. Well, that's a lot, man. That's great.
I think your takeaway from this should be there are options out there, and there are opportunities for you.
No, that's what I totally see now. It's just fear, I think, getting in the way, and just me trying to explain myself out of doing it.
Yeah.
You know?
Well, I think that's good to recognize, because I think a lot of people will shy away from saying, well, it's because I'm scared or it's the fear getting in the way. But I think the opposite should be true. Embrace the fact that you're able to understand like what it is that's actually your challenge, because then you can address it. You can say, okay, well, it's a fear of a certain thing. Okay, well, let me control that variable, and that will allow me to move forward, instead of, if you said, well, it's just bad deals, I can't find the good deals, I can't find enough good deals, then you're not really addressing the real problem or the real challenge that you're experiencing. So I think that's pretty good progress for you.
Yeah, I agree, man, because I just going too conservative on my numbers when I'm doing these numbers. I'm basically just doing it because I'm like, well, this won't work out for me.
Right. Yeah.
And that's what you've kind of made me see, is that what I'm really saying to myself. So thanks.
I would offer on this property.
I'm going to.
So like me personally, if I ran these numbers, I'd be like, oh, I'm sending an offer today, So if that gives you any encouragement or confidence, hopefully it does.
No, it does. And I've been watching this one for a while, so thanks. I think this will be good.
Awesome. Sounds good, man. Cool. Well, we got about 3 minutes left. So if you've got a question, go ahead and throw those hands up. We'll get it answered. Otherwise, we'll wrap it up, and you guys can get on with your evenings, your dinners and whatnot, and I'll edit this and upload it and get it up into the members area so that you guys can reference it and watch it again if you need to. So any other questions? All righty. Sounds good. Good luck with your future deals. If you need me, send it over in Slack, and I'm happy to help analyze. Talk to you guys soon.